On All About Stocks this week, a lackluster week for the markets. The Nifty down 1.5% at the start of our new year. Our guest Amrish Baliga will tell you what your strategy should be in 2014. And since it's a new year, we bring you a brand new portfolio with Amrish Baliga. Welcome to All About Stocks. Happy New Year to you and your family. You're watching ET Now. Today we'll tell you what your strategy should be in the new year, what kind of stocks we expect to run up, what themes are likely to play out, and where you should be investing your money. Remember, our email ID is at the bottom of your screen where you can send in any question you have about the stock market or about your investments. First, let me bring in my colleague Ajay, who will give us an update on how the markets fared in the first week of 2014. He'll also tell us which stocks have run up over the last 1 year due to good governance. Ajay, take us through what you have.
Well, Faye, markets definitely look like in being in a corrective phase as far as large caps are concerned. Nifty gave up around 1.5% this week. However, there was a fair degree of outperformance coming in from the broader markets. Mid cap in this was flat. Small caps actually rose about 1%. So clearly the trader focus this week as well was in the broader markets. However, it was not one-way ride. Extremely volatile was what the sentiment was on the street. And this is exactly how analysts and traders on the street expect next 2-3 months to pan out. Markets would be very volatile. However, most of the analysts on the street do suggest buying good quality stocks on decline. Couple of factors playing on the mind of the market right now. Of course, the US 10-year yields are surging above the 3% mark, which is a 2-year high, which is also giving a lot of Asian currencies, including India, nervousness. Not only that, the dollar index is also trading above 80, which is putting added pressure on our own rupee. Of course, apart from that, January, the third quarter number season kicks off, and the traders say that will also provide fair bit of direction to the market. However, they say that in the next 3-4 months, the market will be very volatile and dips should be bought. And the focus of the market, not only because of the political rumblings, but overall focus of the market is towards companies which are of high degree of reputation in terms of corporate governance, and hence a whole host of companies are coming into focus. The Tata Group companies, the Godrej Group companies, Mahindras of the world, also some of the other companies, and hence a lot of analysts actually go on to say that investors should take a look at these companies with high corporate governance standards, because in due time they will start garnering a corporate governance premium in the sector and hence may outperform the sector.
All right, Ajay, thank you for that update. Joining us today is Amrish Baliga, Managing Partner of Global Wealth Management at Edelweiss Financial Services. Amrish, thank you so much for joining us. Happy New Year to you.
Thank you.
It's a pleasure.
Same to you. And wish all your viewers a very happy New Year. And for it to be prosperous, I think they should participate in the market.
They should participate in the market. It's great to start the year with you. And we've read so many of these articles that keep coming up, research papers that come up saying what our strategy should be for the new year. One of the strategies that we've read about is buy now and start selling towards the last day of elections before the results come out. So sell the day before election results come out. Is that something you also believe in? Is that something we should follow?
If you're talking of the short to medium term strategy, yes, I think that's the way it should work, because you really don't know as to what the final outcome of the elections would be. But surely before the elections you'll have a run up. That's exactly what we've seen in the last 20 years, the last 6-7 elections. That's exactly what we have seen. So this year, I mean, it will not be very different. And we've already seen the sentiment changing. It's improved quite a lot in the past few weeks. And I see that, I mean, continuing going ahead. In fact, we have a target of about 6,800, 7,000 for Nifty. And based on that, clearly you'll have the mid cap and the small caps also outperforming. But then, yes, I think if you're making profit by, say, April, May, always I think it's prudent to take something off the table.
So do you expect a rally across all of next year, across all sectors and stocks, or are there specific sectors you expect to run up?
It will be across all categories, but then when you're investing, you always try to invest in those sectors and stocks which will outperform the others. And we have seen the large caps performing extremely well over the past few months. Now I think it's clearly the time for the mid cap and the small caps, and especially those sectors which did not perform in the last 1.5-2 years. Infrastructure, capital goods, I think these are the sort of sectors which will start outperforming over the next few months.
Okay. And if I'm sitting on a portfolio that I've been accumulating over the last 3 or 4 years, you think it's advisable then for me to start looking at that portfolio and begin to book profits closer to the election results?
No, I wouldn't suggest that. Core portfolio is something which should not really get affected because of the election results. That's meant for much longer term. When I talked of like election results and election sort of a strategy, it is more of a medium to short-term strategy. So if your core portfolio, it's meant for 5 to 10 years, then I don't think you should be selling, unless of course it has reached the levels which you expected it to, the target prices have reached, you're not seeing much of an appreciation after that, yes, then I think you should book out. But then otherwise, you should just hold on to those stocks.
Hold on to those stocks. The other strategy I want to talk to you about is, and this is an idea you shared with us, a rally in good governance over the next 1 year. Tell us what that means and how it would affect our stocks.
I see one of the major issues which we faced in the last 4 or 5 years is to do with corporate governance, and because of which a number of companies really went under. Investors lost a lot of money. So I think going ahead, clearly, I think that will be one of the important filters when you pick a stock, that you should have good corporate governance, good second line of the management. I think based on that, I mean, you have the other parameters also, like your financials and things like that, sector-wise, but this will be an important parameter to be looked at.
Among the mid-caps, if I were to try and look for stocks with good governance, how do I find them?
No, I mean, first of all, you need to see whether, that's a specific group or management has taken care of investors in the past. Whatever they had committed, in public, have they met those commitments? Because you have number of managements which commit the moon to you, but then finally when it comes to delivery, it doesn't happen, or there are scams with certain groups. So I don't think you should really look at buying those stocks, irrespective of where the market is, irrespective of whatever tips you receive on those stocks. It's better. It's like always better to stay away from those stocks.
So if I were to look at the mid-cap sector right now, there are, like you talked about a little earlier, this is the time for mid-caps. There's a lot of risk when I invest in a mid-cap. Also because, like you said, if the election results don't go the way we are expecting them to, or they're not positive, then the mid-caps will be the first ones to fall. Absolutely. So how do I choose a mid-cap? Can you give me a checklist?
No, like I said, when you're looking at mid-caps, first of all, look at the management. Is it worth investing in that management or not? Secondly, you need to look at the sector. Will the sector perform over the next couple of years, not quarters, but couple of years? How has been the performance of the company in the past? Has it been in line with the sector or not? And generally, in financial terms, what we normally look at is ROE, return on equity of at least 20% plus. At the same time, I think it should be quoting at a decent discount to its peers and the large caps. Only then you look for the stocks. Yeah.
I want to go back to the list that Ajay gave us. It's going to pop up on your screen. And this is the list he gave us as stocks that have benefited from good governance that analysts are focusing on. He said Infosys, TCS, Godrej Properties, Godrej Consumer, M&M, HDFC, DFC Limited, Shobha Developers, Maruti, DRL, Sun Pharma and HUL. Out of this entire list, is there anything there that catches your eye that you think makes sense to pick up at this point?
In fact, in my list also you'll have Shobha Developers, you'll have Maruti. Again, Shobha Developers is the mid-cap among the realty plays. But then this is the only stock which I picked up in the reality sector, although we are not too positive on the reality sector. But this particular company, we expect it to continue doing well because, first of all, the management is impeccable. Secondly, it is in it's in an area where you still have decent demand at the ground level. And they have an excellent land bank, which is comparatively quite clean.
What about Godrej Properties in comparison? Does that also make the list?
Godrej Properties, yes. As far as the management is concerned, impeccable, no doubt. But then again, we don't expect the Bombay properties to really do well going ahead, at least if you're talking of the next 2 to 3 years. So there could be a dull patch, because of which at this level I won't recommend.
Now moving on, I have one more idea to talk about, and that's housing finance companies, which are currently in focus. They're growing faster than banks in the home loan market. In fact, let me bring in my colleague Ajay to update us on this trend. Ajay, tell us why housing finance companies are in focus right now.
Around 20% of the home loans being generated in the sector are now coming from housing finance companies. They also go on to say that out of this of course, companies like HDFC Limited has a lion's share. But analysts say that this is one area of growth for housing finance companies. Stocks like Diwan Housing, India Bull Housing, Repco Home Finance, HDFC Limited, of course, is doing a great job in the home loans sector. They say that high growth, low NPA and better efficiencies, and also the low valuations, a lot of these housing finance companies are trading at right now merit a look as an investment case compared to the PSU banks or private sector banks, which are trading at much more higher valuations and are growing at relatively lower growth due to the NPA concerns. So investors are saying that this sector can be looked into for investments for the long run.
All right, Ajay, thank you for that information. So it's interesting, there is a theory right now in the market that going forward NBFCs will outperform banks in the stocks at least. Right. Is that something you agree with? Should we be now moving our focus from banks to NBFCs?
To a certain extent, because NBFCs have been quoting at a discount to the banking stocks. And generally, whenever you have an uptick in the economy, which we expect to happen sooner than later, you will have the NBFCs outperforming, at least for a while.
Well, of the list that Ajay was just giving us, HDFC, LIC Housing, Diwan Housing, Repco Home, is there anything there that you find attractive among the housing finance companies?
HDFC is clearly quite attractive. I mean, long-term play. Repco Finance, Home Finance, I mean, this again, we were recommending at levels of about 190, 200. Still, it is on our buy list, but not a very hot buy at this point of time. And the other stock which is there in my portfolio today is Bajaj Finance, where again, we see extremely good growth.
All right, so those are your investment ideas and your strategies for the new year. It's time for us to take a very quick break, but when we come back, Amrish Baliga has built a brand new portfolio. He'll give us his rationale behind picking these stocks. On the other side, don't go anywhere. Welcome back. You're watching All About Stocks on ET. Now, Amrish Baliga is still with us, helping us figure out our strategy for our long-term portfolios. Well, Amrish has designed an entire portfolio for us. It's a new portfolio for the new year. This is a long-term portfolio. Amrish, 3-4 years. What's your horizon on this portfolio?
Yeah, I mean, the horizon is at least 4 to 5 years. But then, yes, we will be visiting this portfolio every month to see if, I mean, anything has changed drastically and it's fallen out from what we thought would happen. Otherwise, we'll just hold on to the stocks.
All right, so 4 to 5 years on this portfolio. I'm going to give you a list of those stocks. There's Maruti Suzuki, ICICI Bank, Larsen & Toubro, Z Entertainment, Alembic Pharmaceuticals, Pidilite, Lupin, Wipro, Ramco Cements, Bajaj Finance, Shobha Developers, and Matheson Sumi. Equal weightage across all of those stocks. I want to talk to you about a couple of the mid-caps. Now, there's Matheson and Alembic. They've run up a fair amount in 2013. Right. Are you expecting more from these stocks in the coming years?
Absolutely.
Tell us why.
If you look at Matheson, look at the last 8 to 10 years. It's been growing at about 40-50% year on year, and we expect that to still continue going ahead. Extremely good export market. Even the domestic market, we expect it to turn around. I mean, last few months have been pathetic for the auto manufacturers. But then we see that turning around in the next couple of months. And since we expect the growth to continue, I think even at these levels, despite the sort of a way it has moved, I mean, although we've been recommending this stock for the last 5 to 6 months, but even at these levels, one can still buy.
All right, let's also talk about Ramco Cements. I'm going to pull up that 52-week chart on your screen. You'll see it's currently at 184, but it had a high of almost 260. Do you expect it to recover that at some point? What's going on with this stock? Why do you expect it to do
cement, well, overall has not been performing too well in the recent past. But then we expect with the infra projects taking off, this cement sector should start doing well over the next possibly 5-6 months, post 5-6 months. Ramco, again, one of the largest in South, and we expect the South market to recover before the northern markets recover. And this is quoting at about 30% discount to its peers. So extremely good management, good performance in the past. So at these levels, it's quite attractive.
All right, let's also talk about ICICI Bank, which is your only banking pick on this particular list. Now, given valuations of ICICI Bank right now in comparison to its peers, why does this make your list? We know you believe that the management is strong, but so is the case with Axis Bank or HDFC. Why ICICI particularly?
But again, if you look at across various of those sub-verticals, it's a leader across. It's been able to set its books right. I mean, we had fears as far as the NPAs are concerned. That has been set right in the last couple of quarters. We expect a growth of about 20% year on year, at least over the foreseeable 5-6 years. And compared to the peers, I think it's still decently priced. So being one of the largest, I think at these levels, one can buy.
All right. Two pharma stocks in your portfolio. There's Alembic and there's Lupin. Why do both of them make... Is it important to have two pharma stocks in our portfolio?
Yes, absolutely, because that's one sector where we see it performing extremely well over the next 4 to 5 years, export-oriented. So at least you have that benefit too. And both these companies, again, we are looking at a growth of about 20-22%. Alembic should be growing at about 20%. Lupin, we are looking at a 22% sort of a growth. Extremely good lineup of products. So I don't see any reason as to why these stocks should not perform from here.
Well, if you're looking at pharma, then normally people have also been talking about FMCG this entire year gone by. There's no FMCG representation in your portfolio. Is there a reason why you've left it out?
There is a reason, no doubt, because at least in the foreseeable future, we don't see discretionary spends really increasing. In fact, we see some sort of a cut as far as that is concerned. At the same time, most of the FMCG stocks seem fully priced. ITC to a certain extent is still not fully priced. But then for that small upside, I mean, when I can have only about 12 to 15 stocks in my portfolio, I surely would not like to have a FMCG stock where there's not too much of an upside immediately.
I'm going to ask you a general question for all of our viewers right now. You said only 12 to 15 stocks. Right. Is that a hard rule? Tell us why we should only have 12 or 15 stocks in our portfolio.
If you have too many stocks in your portfolio, it gets diluted. For example, if you have just about 10 or 15 stocks in a portfolio, generally as a thumb rule, you will have about 5 or 6 stocks doing extremely well, a few of them doing reasonably well, and possibly you will have about 3 or 4 stocks which may not do well at all. But then if you have, say for example, 100 stocks in your portfolio and you have 10 stocks doing extremely well and you have the rest 90 which are doing possibly not too well or some of them do badly, then the benefit which you get off from these 10 stocks will completely get diluted. And secondly, it's very difficult physically for anyone to really manage and look at 100 stocks at a time.
All right. So these are the 12 stocks that Amrish has picked for us for 2014. Remember, he said this portfolio, he's looking at it with a 4 or 5 year horizon. I'm going to give you a recap of the stocks he's picked out. Maruti Suzuki, ICICI Bank, Larsen & Toubro, Z Entertainment, Alembic Pharmaceuticals, Pidilite, Lupin, Wipro, Ramco Cements, Bajaj Finance, Shobha Developers and Motherson Sumi. If you have any questions about that portfolio, of course, you can reach us on our email ID. We'll have Amrish come back into the studio and answer your questions for you. After the break, we'll discuss stocks like Exide, Jet Airways and Muthoot Finance. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Amrish Baliga is still with us in the studio helping us make money over the long term. Amrish, we have questions for you this week. Shubro has written in. He wants to buy Exide Industries for the long term. He tells us the share price has been more or less stagnant. What impact do you expect in the Q3 earnings to have on the stock? Exide ended the week at 117 almost. What's your call on Exide Industries?
Exide, I'm quite positive. Replacement market demand is, I think, what will take this stock up. Last couple of quarters have been a bit poor for the company, basically because the way the lead prices had moved and they had large inventory. But I mean, the way the tire stocks have moved, basically based on the replacement demand, I see the same thing happening in the battery stocks. And Exide being the largest should really benefit. The stock has not really moved, so that's clearly like an opportunity to buy at these levels. Because something like an Exide, a Seat, in fact, moved up from those levels of 90 to about 145, remains stagnant there for a while, and from 145, it's nearly doubled.
All right, we have another question from Padam, who's written in. He has 301 shares of Jet Airways, which he bought at 390. He wants to know if he should hold on to that stock. Jet ended the week at 292. Now, that deal which we've been hearing so much about between Jet and Etihad just doesn't seem to materialize. Does it make sense for an investor like him to hold on and wait?
It does not, because even if it materializes, what is there for the shareholder? I mean, is there an open offer? No, it's not there. And secondly, if you're looking at the business overall, I mean, this business has never really made money in India. Indigo is making money, but we still haven't looked at the accounts. We only hear that they are making money. And at the same time, the costs are going up, airfares are not. So it doesn't really make too much of business sense. So people had the opportunity to sell this stock when it moved up because of the deal. Yeah, but at these levels now, I don't see too much of a future.
Is that true also for SpiceJet? Would you recommend people get out of SpiceJet as well?
SpiceJet is yet to get that investor, the special investor like what Jet has got. And when they get that strategic investor, possibly you will have a decent move. It just started moving. It was about 16, it has moved up to 19. It's very much possible that there could be a talk of a strategic investor, but exit when that sort of a talk comes true and it moves up. Don't wait for the business to recover.
All right, don't wait for that business to recover. Last question on the show. Dinesh has written in. He has 100 shares of Muthoot Finance, which he bought at 110 rupees. Should he hold on to that stock? We know that Muthoot Finance has a fairly large amount of businesses that they're planning to foray into. Is that enough convincing for you? Do you think if you should hold on to that stock?
Not really, because their main business is gold loans, and there seem to be a lot of restrictions which are there. And any business which is like over-regulated, I think one should be out of that. So he's getting somewhere close to his purchase price. I think he should be exiting.
All right. Now, Muthoot Finance has also talked about opening an NBFC, and we talked about NBFCs earlier in the show. Does that justify holding on to the stock, or do you think not yet? Because there are better choices?
There are better choices. I mean, it's better to buy a business where you've seen as to what has happened in the past. There's a track record. Here, they're talking about something for the future.
All right. So get out of Muthoot Finance as well. And if you have any more questions for Amrish Baliga, send them to us on the email ID that's at the bottom of your screen. Thank you so much for watching. Amrish, thank you for coming in, and we hope you have a wonderful and prosperous year. You'll find a copy of this show on our Facebook page, and you can reach me on Twitter. Thanks for watching.